I know. I checked too. I didn't believe you. And then you were right, and I was kind of shocked. Not that you were right, but just that,
No, it's all right. That's on the record, Lisa.
We're living in real time. Let's put it that way. What we're going to do is migrate to the airline business. And what's so important here is we all have, John has his flights. He looks at Italian islands. I can't pronounce. Lisa has a host of flights where she has to sit in Atlanta at Hartsfield for 6 hours delayed. Hey. And I have 2 flights. I have a flight to Paris I look at just as a benchmark to Europe. And I just look, Lisa, conventionally at New York to LAX. And I look at Google, and they got the little red and the green and the yellow stripy thing about where's the value. In 1,700 business class right now, or 2,000 is what Google calculates, is actually pretty attractive. We're getting over to the green side. That's almost a legit price, a lower price of New York to LAX.
Legit price. And this means deflation, which is what we saw in yesterday's CPI print. And everybody said, no way, we're not buying it because it's not what we're seeing. George Ferguson covers the airline industry for Bloomberg Intelligence. George, how long can true deflation last in airplane tickets?
I mean, it's going to hurt profitability for sure. I think if the airlines could change it, they would, right? Because it's part of the competitive dynamic. Everybody's returned capacity to the marketplace. And I feel like it's the consumer starting to, run out of gas. I think we've said that for a while, though, so maybe.
At a time where there's this debt overhang. And then the larger question, does it matter for the U.S. economy? To what degree are we not pricing that in?
Absolutely nailed there, the microeconomics of it. The media focuses on banks as what's Jamie Dimon doing, what's Brian Moynihan doing, and as you correctly state, the loan demand is absolutely critical from the public. The other way I'd look at this is disinflation towards deflation mathematics is just not studied because it doesn't exist, except the British have as a third rail an understanding of this before World War II. Their depression was totally different than ours and was a true outright deflationary moment. The British and their academics just totally gets this mathematics, where Americans were like, growth, 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 growth. It's all going to get fixed. Growth, growth, growth. We'll fix this. We need more growth, like what we heard from the president overnight.
Are they pushing on a string? Let's make this really, really simple.
That's a cliche from the 30s.
I speak to a lot of people who know what they're talking about in China right now. There's a shock to confidence. What can they do about it? Coming out of the shutdown, we all thought China booming. That was the consensus view for 2023. China boom, US potential recession, the Fed cuts rates. Turn that story on its head for the year so far.
Yeah, well, I wondered, like, does Andrew Hollenhorst, Bill Dudley, does Mohammed El-Arian suggest that we need to worry about deflation? I think they would push back against that. They would say the system will solve that angst.
Let's turn to the price action. Got a great guest coming up who's going to talk about some of this. In the equity market, almost totally unchanged on the S&P 500. Talked lots about the bond market through the week. We had some issuance from the Treasury. I say some. I'm using that word loosely. Had a ton of issuance from the Treasury this week. 3-year went okay. 10-year was all right. 30-year was a bit of a struggle yesterday, so that fueled a move in the Treasury market. Yields up, Treasuries down. This morning, yields down by, let's call it a single basis point, Lisa, on a 10-year, 4.0958%.
Yesterday we got the CPI report. Today we get the chase for the U.S. PPI report. That comes out at 8:30 a.m. Do we see the same kind of disinflation that can give everyone this warm and fuzzy feeling of of the good space if you get that bleed through kind of effect?
We could be pushing 13 million barrels a day in oil production in the United States by the end of the year, Tom. New forecast earlier this week is quite a number.
Yeah, cardinal rule, the math is there. Try not to predict the oil market. It's a good way to lose your job. Look at Jeff Curry. He's gone at Goldman Sachs. But the answer is...
You have to correct that. He was not pushed out for getting the market.
Good morning, Jeff. Good morning, Dr. Curry, I should say.
Okay, carry on.
I'll carry on here as we hope. We wish Jeff Curry the best of luck. But the bottom line here, John, is you know what? Brent crude's are $90 a barrel.
You can't start rumors like that. You know that, right?
Who said it was a rumor?
What?
TK, you're in the penalty box. Jeff Curry departing Goldman Sachs, and not because he got a crude forecast wrong, TK. Emily Rowland joins now, co-chief investment strategist at John Hancock Investment Management. Emily, don't worry, we'll keep him in line. Let's talk about China. Emily, Do we want stimulus out of China right now if you have a seat at the Federal Reserve?
Well, I don't know if it's working necessarily. You look at some of this loan growth data this morning, and it's simply not showing up. I think the China stimulus narrative is one that the markets have really loved and embraced, and we're getting a bit of a reality check on that. As it relates to commodity prices, all of this news of stimulus has certainly pushed them up, pushed inflation expectations higher, and that's become a big problem for the Fed here, who certainly has not yet claimed victory on inflation. So we're watching that really closely here, but a lot of mixed messages. And by the way, speaking of mixed messages, I understand trying to get to the weekend here, as you've said all morning long. If you watch the macro and you watch the fundamentals this week, the market action didn't really make a ton of sense. Of course, we had the Treasury auction that you talked about pushing yields higher, but at the same time, the economic data were pretty disappointing.
Right.
You had softer inflation, you had initial claims picking up, you had dovish comments from the Fed. Meanwhile, the 10-year Treasury yield sort of right where we started, and European equities trading on another planet right now.
And Emily, within your note, you talk about whipsaw, and I think it's perfect. It's just one big group whipsaw here over the last number of weeks, whatever anybody's belief. With that said, in the group whipsaw that we're in right now, how do you position out 1 year or 2 year in my depleted 201k?
Yeah, it's tough. So the macro signals right now are like a stoplight. They're going from red to green and back to red. And we look at the macro messages right now as more of a yellow. You want to maybe take your foot off the gas a little bit. You want to look both ways. You want to proceed with caution. So we're starting to see this big shift in sentiment. It's been pulled back a little bit over the last couple of weeks from fear to greed, and you're starting to see more cyclical, higher beta parts of the market outperforming. We would be mindful of taking too much risk in this environment. Again, we still want to be invested. We still like higher quality stocks. We think bonds can do more heavy lifting in a portfolio. But look, the leading economic indicators have been negative for 12 straight months. The yield curve has been inverted for 13 straight months. I mean, it's just become exhausting. But we need to stick to our premise here. We need to stick to our work that tells us that a recession is likely to unfold due to the lagged impact of Fed tightening. But it's becoming difficult to stay patient for sure.
I just want to pick up on what you said about European equities trading on another planet. What do you mean? And just the fact that they haven't sold off more aggressively in the face of China weakness?
Yeah, I think it's notable to look at the strength, particularly versus domestic equities as of late. Europe has certainly been more tied to China stimulus. You've seen that. You've seen a big momentum trade there, I think, as some short covering has resulted in a lot of gains in that market. And you're seeing, some major companies in Europe disappointing on the earnings front, some solvency issues there. Markets really seem to be very much enamored with Europe. They're very much enamored with this China story, and it just doesn't match up with the macroeconomic data. Look at the Citigroup Economic Surprise Index. It's surging in the United States right now, and it's about negative 100 in Europe. And yet those markets are outperforming. To us as macro investors, we want to continue to emphasize domestic equities because of the relative economic strength here.
That said, U.S. tech underperformed this week, I should say, not this year. This year they've outperformed tremendously. But how much is that going to be a real challenge to your thesis if it continues?
Yeah, we've definitely seen a pullback there. And of course, valuations were stretched and we were expecting to potentially see, a bit of a profit taking there. And, I still wonder if tech is the biggest issue that markets should be focused on. It's hard not to like quality in this type of a market. And of course, tech is your poster child there. I think over 3-5 years, we've seen that U.S. technology sector has produced of the best earnings globally. Of course, we want to diversify from some of that. Look at some of the ways the sectors that are starting to perk up a little bit here. Healthcare, one of our favorites. It's trading at a meaningful discount to the S&P 500. It's got the quality metrics that we love, great balance sheets, good return on equity, and it's more defensive. So I do think that the baton can be passed here in the back half of the year into next year to some of these more defensive sectors in order to create that balance away from the tech sector.
Emily, final question. Are you on the strong dollar train as well then?
Yeah, we have been. The way that we look at the dollar is where's the best relative economic growth and which central bankers globally are going to be continuing to tighten the most. And because of the relative strength we talked about here in the U.S., we think that's the U.S. Federal Reserve. We think the U.S. economy is doing the best. We also think if a recession unfolds, which is our base case, there should be a bid for U.S. dollars. I don't know that the dollar goes gangbusters like it did in the first few quarters of 2022, but I would say I would fade any weaker dollar trade here.
European markets on another planet. That's the headline from Emily Rowland of John Hancock. Whether you intended that to be the headline or not, it will be. Emily, thank you. Have a good weekend. Thank you, Emily. The euro right now, 109.92. Tom, European stocks, the Euro Stocks 50, up something like 15% year to date. Not too far off what the S&P 500 has delivered.
We'll state that of all the different opinions we have on the show, the one constant theme has been surprise over Europe in the last 6, 8, 10 weeks as well. I would still suggest that we underplay the war reporting that we see day by day in Ukraine. It should be more in the discussion than it is.
If you are just tuning in, welcome to the programme. The equity market right now on the S&P 500, negative by 0.05%. Coming up in about 48 minutes from now, Anne Maletti of Allspring Global Investments to weigh in on this equity market so far in this rally year today and whether we can get that continued broadening out away from tech to the cyclicals. Bit of breaking news in the last 10 minutes, Tom. This from Sky Sports. Harry Kane now has permission to fly to Germany and undergo a medical at Bayern Munich.
Was that a Brexit thing?
$100 million plus transfer is set to go through between Tottenham and Bayern. A Brexit thing. I think that was Daniel Levy getting on the phone and trying to hammer out a few more details thing.
Explain to Americans who don't understand why Lionel Messi's in Miami, explain where Byron fits in.
What do you mean? What? Can you reframe that?
There's a lot of Americans that
they
this is
love
all
this
like
sport.
Greek. No, it's all Greek to
do.
most of us. We're worried about if the Reds have enough to get a wild card slot in the National League. John, who is Byron? What is the importance
Us
of
dumb
this?
Americans don't know anything. And you
No,
And then I've got to
anything.
sit here and talk down to everybody.
Exactly. You
wouldn't
tell
know.
us exactly what we should be paying attention to.
I wouldn't know Byron from Dortmund if it hit me over the head. Who is Byron?
Heavyweight European football club based out of Germany.
They're like Real Madrid.
Well done.
They're like AC Milan. They're like
They're
Barcelona.
up there. They're up there. They're competing for the top titles in European competitions every single year.
So when he plays a friendly or a UEFA, whatever it is, championship
That's not a
game
friendly, but yeah.
in England, that will be a big deal. The return.
If he
of
plays
Harry
a
Kane.
Champions League game in England, that would be a huge deal, particularly if he got to go home and play Tottenham. But you need to qualify for these competitions, Tom, first.
I'm learning
like,
every day.
Compete to try and win stuff and all of that. Vishy Tripatur of Morgan Stanley joining us in about 20 minutes from New York City. Equities negative. Good morning.
The goal of this executive order is to make sure that we're limiting the ability of financial and the know-how that often goes alongside those financial flows to give countries of concern the ability to get around the things that we're trying to prevent them from getting access to, like the most advanced semiconductors.
That country of concern in this instance is China. That was Wally Adeyemo, the US Deputy Treasury Secretary, following the executive order from the President of the United States on outbound investment into China, trying to curb that, curtail it. The president also had something to say about China at a fundraiser in the last 24 hours. Yesterday evening, he referred to Communist Party leaders as, quote, bad folks, and went on to say, Lisa, this economy in China is, quote, a ticking time bomb. And that speaks to the data we've had out of China so far this week. Whether you'd quite go that far and characterize it as a ticking time bomb is up to you. The data on the loan side of things, Chinese banks extending the smallest amount of monthly loans since 2009. Lisa, this going together with the deflationary data earlier this week, it doesn't look too good over the last week.
And it raises a question of what China's going to do about it. And Peter Scheer was talking about that yesterday. And President Biden hinted at that as well. They're not going to take it sitting down. How are they going to try to generate growth? Is it going to be in other economies? Nonetheless, the message, the headline of, basically a ticking time bomb and bad folks is perhaps a little bit different than some of the conciliatory moves by members of his cabinet, as well as some paring back.
Does bad folks sound like an insult to you? Bad folks.
I would not want to be called bad folks.
Bad folks.
Okay, well, I mean, it's like trying to gather a certain type of tone ahead of a campaign.
What would that tone be?
we're not in it for China, basically.
Bad folks.
Yeah, bad folks. Well, you would never call someone bad folks.
So
I mean, that's an
soft.
insult.
No one calls anyone a bad folk.
If you come around here again, you're a bad folk.
Bad folks, TK. Bad folks.
Bad folks.
Bad folks. You got to speak, Tom. It's radio.
It's radio.
It's
You got to
radio.
speak. Good
This is
morning
what
on
you do.
Bloomberg Radio.
You get the microphone.
Thank you.
You engage it and you talk. I've worked with you for a long time. If you're just tuning into this program and we're still keeping you, thank you. TK does this thing, and you have to know about it because it's really important. In radio, if you miss your cue and there is a moment of silence and you pick up and
Deadly.
start talking, you own it. It's yours, because to the audience, you missed your cue. So what Tom does when he misses his cue and doesn't speak is he waits for someone else to own it for him.
The reason we do this, this is
decade of
important. Jeanette Lowe's gonna have some patience here for us. This is really important. There's two kinds of people on TV: people that have done radio and people who have not done radio. And to John's point, which he's brilliant on, is silence is everything in this business. So when they're doing that, and I'm sitting here looking at the Red Sox, they got no chance against the Mariners. And the bottom line is you use the silence for showbiz and you extend it.
Yeah.
And then give it to someone else.
Yeah, and let someone else own it. Yeah.
Like that. Let's break the silence here with Jeanette Lowe, Never Silent, Managing Director of Policy Research at Strategia. She was at Richmond years ago at the Jefferson Hotel with that acclaimed Jefferson statue, and she figured out that if you make a law in Washington, everybody piles on and enhances the law. And your research note, Jeanette, I think is absolutely brilliant about now we're making policy about China. The president is making policy. Will we see Congress in various forms pile on and make our policy with China ever more limiting and restrictive?
Yeah, absolutely. So, I mean, we finally got the executive order that Biden has been heralding for quite a few months now. So we knew this was coming. It was definitely a little bit more limited in scope than originally thought. And you could already see members of Congress starting to put some messaging out both before the executive order actually hit and after it. And so what you see is that the administration is saying that they're going to focus on targeted products and services within AI, semiconductors, quantum computing. But the Treasury is going to now issue those rules, and it's going to take some time to be implemented. Congress is already saying, you know, Senator Schumer has been on wanting to do legislation on China for quite some time. He's immediately said that he wants to now codify these restrictions that kind of came out of this executive order and refine them. You have members that are on the U.S.-China committee. So you have members that are, you know, the head of the Foreign Affairs Committee already saying the executive order goes far enough. It should include other areas. So this is still the beginning stages. We still anticipate that we're going to see more coming out of Congress that's going to build on these restrictions. So even if we have this executive order now that we've been waiting for, there's still more to come, and they're going to still refine it, as they said in the executive order, kind of taking a look at what are these notifications of various use investments that we do have in China, and then figuring out where they may actually need to do more restrictions in the future.
Jeanette, some people are saying that the restrictions were severely curtailed from their original form and are actually very narrow and much less restrictive than previously thought, and that the reason why President Biden talked so harshly about China was to sort of distract or send the message that he was harder than his policies actually were. Do you agree with that type of sentiment?
So I think that the administration is trying to probably thread a couple lines. One is, you know, the U.S. is also, as you mentioned earlier, Biden is going into campaign mode. You know, you're going to have these speeches and these talks. Obviously, this wasn't a speech. This is more of a private fundraiser, but that they want to start showing that the U.S. economy is doing quite well and make this contrast with China. There has been the push that, you know, maybe Biden isn't being tough enough on China, but there is this, you know, we're trying to move it in stages and then build from there. So I think that to some extent, he would probably like to do more and faster. And that may be some reason behind some of his comments. But I think he also is trying to draw this line between the U.S. actually doing better and China not doing so well, but that we also need to do this for national security reasons.
I looked, Jeanette, at China and what is assumed to be the response out of Washington, What will it mean for American business? Is this a political exercise, or can you bring it over to the total dearth of FDI that we see towards China?
Yeah, I mean, this is definitely one concrete step that we are taking, but at the same time, the administration is sending a message to businesses that China is more of a risk than it has been in the past, and that there is more of an effort that companies need to undertake if they are going to continue to do businesses in China. And the U.S. also wants to highlight some of the issues that we've seen with companies investing in China over the years, with joint ventures, having to give up data controls, things like that. But there is definitely, I think you're already seeing, yes, we've had the CHIPS Act pass, but some of that funding hasn't even come out. You're seeing investment move to the U.S. already ahead of that. I think this executive order, even though the rules aren't in place, is still putting forth that environment for businesses where they have to reassess whether or not they want to be in China, take those risks into account, and consider moving supply chains or all of their business out of China overall, because more of these changes are coming.
Hey, Jeanette, wonderful to get you on the show. Come back soon. Jeanette Lowe there, a Strategist. We appreciate it. Important to know, and we did this in the previous hour, but I think it's important to double down on it. These comments from the president came at a fundraiser, Tom, a fundraiser to donors in Park City, Utah. And this is what it's about now, to raise money for both the Democrats and Republicans. This just seems to be a box you've got to tick on a campaign trail. You've got to say things like the president said yesterday evening.
Playing to a domestic audience, and of course Beijing knows he's playing to a domestic audience, but they're going to use it for their own needs internationally and domestically as well. But yeah, what's unique here, and I thought Jeanette was just brilliant there, on the bipartisan nature of this. If Congress piles on and makes it more, just to use a general phrase, restrictive, who's going to push back? Who's going to say, let's think about this before we act?
You've made a couple of points there, Tom. I'm so pleased you made the first point, because so much of this is for public consumption. Publicly, China said they were disappointed by that outbound investment order. I think privately, they're probably a lot happier. It was more narrow than it could have been 12 months ago. So even for them, Tom, and you've made this point, it's for public consumption.
It's all,
We're disappointed. We're disappointed. But at the same time, Lisa, how much has changed?
Yes. Although if you look at the data, and this to me really stands out, you're absolutely correct, by the way. Everyone would agree that basically the rhetoric has to be hardline, and then underneath there's the reality of needing a little bit of working together in order to keep both economies on the rails. There has been a divergence, though, between these two economies, which really goes down to the fundamental question of why have we not seen more of a read-through in the U.S. economic data with respect to what's going on abroad.
We'll continue this. Catherine Mann, I think, is brilliant in this. We'll talk about it here as we stay with us, folks.
Is Catherine Mann going to come on the phone?
Well, we're not going to get Catherine Mann on the phone, but her work on China-U.S. codependency is definitive.
It'd be good if we can make that happen, though.
I'll get the interns on it.
One day. Vishy to the tour of Morgan Stanley on the fixed income market, on the bond market coming up shortly. Your equity market basically unchanged. From New York, this is Bloomberg. Let's get you to the weekend. I'm going to stop saying that now.
You said that like...
Four.
Where's my Tang?
I've got like a sign that holds
every
up.
Time John says that, I'm going to have a sip of Tang.
This is for the London desk who might be playing a drinking game before they go to the pub. Just maybe. Maybe this is just for the audience in the City of London.
Someone dared do, didn't they?
Who are ready to call it a day at midday.
Is there anybody in the City of London in August?
Right
is
now?
Is it like Paris where everybody exits?
Did you see that meme? How funny was that?
Yeah.
About the US economy. It's like this guy calls this other guy and calls up and says, US economy's doing great, inflation's coming down, GDP's brilliant, speaking down to the European market participant, and they just get an out of office reply that we're out of office until September 20th. Love that.
The heart of the matter there, John, is because I know we got to move forward. France has the same productivity America working, I believe it's 18% less. That's the math, folks. It's irrefutable.
Can't fight it. Can't fight it. Under surveillance this morning, the latest out of China. China's economy showing further signs of weakening. New loans from Chinese banks in July plunging to the lowest level since 2009. Just adding this week, TK, to a slew of recent negative data out of the world's second largest economy.
Read in this weekend. There'll be lots to read about this. It's important to be informed about the nuances. I'm going to go back to the heart of the matter, which is people look at this China, America, China, China, America, China, baloney. Look at Vietnam. Look at Malaysia. Look at Mexico. Look at a good part of South America. This is a more complex discussion than the simplicity the politicians speak of.
President Biden calling them bad folks, but it's been bad data all week.
And how much does this lead to a real shift in the strategy by China? And I keep going back to what Pete Scheer said of Academy Securities when he was saying you're going to see Chinese companies try to compete more directly with U.S. companies in Latin America and Africa. There is going to be some new sort of alliances that are drawn more severely that I think are going to have to come to the fore.
Quote of the week. Quote of the week. Can we start doing that? That would be fun. Quote of the week this week came from the President of the United States, and it was not about China. It was about the Inflation Reduction Act. You could not make this up. Republicans could have written this for him. He said he regrets the name of the Inflation Reduction Act, saying it, quote, has less to do with reducing inflation than providing alternatives where we generate economic growth. He said a little bit more than that, but Lisa, ultimately, wasn't that the complaint on the other side of the aisle down in Washington before this got passed?
So everyone was saying it was called the Inflation Reduction Act to get it passed, because how can you vote against the Inflation Reduction Act at a time where you've got the fastest pace of inflation going back 40 years? Who's going to fight against bringing down inflation? And now people are wondering how much this is actually fueling some of the sustained growth that we've continued to see. Look, I mean, either way, he's saying the quiet parts out loud, right? And the issue is it is fueling some growth, and he's trying to now put the emphasis on that because
he wants to own the growth because inflation's coming down.
Yeah, because inflation isn't necessarily the plan.
I think the president could go on Wall Street Week with Larry Summers. It'd be interesting.
That would be a great conversation, wouldn't it?
To see the balance here between inflation and growth. That's always what it's about.
I'm not sure the president wants actual questions at the moment.
I'm not.
You know how that works.
Go there. I'm in the Jeff Curry timeout chair as it is.
Well, you're in trouble for that comment. Yeah, okay. German
What
Ford
else?
recovering a bit this morning. Yesterday, the biggest one-day loss of the year so far for the likes of General Motors. This drop coming on concerns that demands by union leaders could send labour costs there absolutely soaring. Labour power in the last couple of weeks back on the agenda, Lisa, even as we talk about disinflation.
Other workers in that same industry are starting to raise a lot of pressure. So even if they aren't hiring and affecting the labor market directly, indirectly, there is a pretty significant impact on increasing wages.
It's been a massive conversation. You've seen the memes out on X, on Twitter, UPS drivers driving Lamborghinis and all of those kind of things.
I mean, in fairness, it is a living wage with some of the increases in prices, depending on where you live. It's more than that in some places. But it's trying to harken back to the 1950s, or a time where
why are you
one
looking
person,
at me when you harken back to the 1950s?
One person, I'm going to look at nobody. I'm going to look at you. When one person could go to work and then support a family. You can't do that anymore.
One vignette. I'm in Davos. It's freezing out. I'm with a CEO of a fancy health company.
So in touch with the people.
John, the CEO of the health company.